Hey everyone, Daniel here, and welcome back to another video. Here today, I want to sit down and fully analyze AcuityAds stock. This, in my opinion, is one of the most attractive tech/growth stocks in the stock market at this moment in time, and I hope to kind of communicate that to you guys in this video here today. Here's a brief overview of what we're going to be talking about in this video. First, we're going to go through the company's business model, exactly what they do, how they make money, and the future that their business holds. Next, we're going to go through the company's financials. This is looking at their revenue growth, their profitability, and their balance sheet. Lastly, we're going to go through my long-term price targets, looking out to 2025 and coming up with a price target by, essentially looking at things like revenue growth, profitability, and valuation. And I'll also add a bit of value by, talking about exactly how much Acuity I hold as a percentage of my portfolio and my plans for what I'm doing going forwards. So if you enjoy these videos, feel free to share them with a fellow investor, and let's get into it. First thing we got to kind of identify here with Acuity, they are a Canadian-based company. They're based in Toronto, but actually a majority of their revenue does come from the United States. They do trade on two exchanges, the OTC exchange in the United States and the Toronto Stock Exchange in Canada. So if you want to buy this stock in American dollars, you'd go to ticker symbol ACUIF, and if you want to buy it in Canadian dollars, the ticker symbol is AT.TO. When we look at all of their income statements and balance sheets, it's all reported in Canadian dollars, but when we talk about price targets and things along those lines, all potential upside in percentage is directly correlated to both the American stock and the Canadian stock as well. So let's get into it. First thing I want to talk about is exactly what the business model of Acuity is. We're going to go through a brief overview and then we're going to go a little more in depth into certain parts. So when we look at Acuity Ads, they're a programmatic demand-side platform for online display ads. Advertisers or their agencies use it to buy ad space on websites, bidding on ad spots in a real-time auction. Acuity buys the ad space at wholesale price from the websites through supply-side platforms or ad exchanges. Acuity makes its money by marking up the cost of the ad space. The company used to be mostly a service business running its old software for its ad agency and direct advertiser clients, but with the successful introduction of Illumin, essentially on October 1st, 2020, it has shifted to more of a run-it-yourself platform, making it much easier and more profitable to bring on small agencies and advertisers who want to run their campaigns themselves. So let's dig into this a little further. When we talk about Acuity, what they do, they buy essentially ad space at wholesale prices from ad exchanges. And then what they do is essentially they auction these on their platform where advertisers essentially buy them at a marked up price. Now, you really think to yourself, why would advertisers want to buy the same ads for an upped price? Here's why. When we talk about Acuity, they have a lot of programs in their platform and a lot of algorithms to identify trends and come up with the best potential advertisements for your ad. This is just an example here. These aren't, real numbers, but they generally show kind of what Acuity does as their platform. Let's assume that I want to spend $1,000 on ads for the finance channel. Without Acuity, I might get 10,000 impressions. People will see my advertisement 10,000 times, and the click-through rate on the ad is 100. So 100 people out of those 10,000 choose to click on the ad or potentially buy my product. With Acuity, though, I spend a little more. I spend maybe $1,500, and I get the same amount of impressions. But what happens is, given the trends that were identified with Acuity and the efficiency that comes with the platform, the click-through rate doubles to potentially 200. So instead of having 100 people click on my ad, I might have 200 people click on my ad. Why? Because potentially the location of the ad might shift a little. It might be on a different platform than before. Acuity might tell me, this ad really isn't working, maybe switch it up a little, things like that. Small things that make a difference, in this case with Acuity, a potential bigger bang for your buck on the end. Now, when we talk about exactly, what Acuity is versus Illumin, when we talk about Acuity, this is what they were for the past decade, right? They essentially catered towards larger institutions and really worked with ad agencies to run programs. Now, what they've done as of October 1st is they've shifted their business model to Illumin. Now, what Illumin has is the same essentially technology as Acuity, if not better technology, but what they've done is simplified it to the point where regular day mom and pop shops or regular consumers can go onto the Illumin platform and essentially run campaigns, run ad campaigns on their own. And when we look at what this interface looks like here, they have done a phenomenal job of modernizing the advertising space. And I want to use this example here. 20, 30 years ago, if you wanted to have a website, what would you do? You'd call up your website builder, you'd pay them some money, and they would build it for you. What's happened with essentially over the past 10, 20 years here is we've gotten to the point where companies like Squarespace or Wix have been able to modernize the process of making a website to the point where you no longer need to call someone to make your website, as you can go onto Squarespace, Wix, and make yours within a couple of days. So what's happened here with this shift from potentially Acuity to Illumin? With Acuity, the program was still there. It's awesome. They worked one-on-one with potential larger institutions to run their advertising platforms. But what they've done with Illumin is simplified the process to where anyone can use Illumin to create their own advertising campaigns, which not only makes it simpler for the smaller guys and opens up that mass market opportunity, but makes the overall process cheaper for Illumin and cheaper for Acuity from a gross margin standpoint. Think about it. With Acuity, you had essentially employees working one-on-one with your consumers to run these ads. But with Illumin, it's all done through software now. So when we talk about gross margins, I think that as this Illumin aspect of their business continues to expand, gross margins will increase as well, as you no longer essentially have that need for as many, potentially workers to really communicate with your customers. And that is one of the beautiful things with Illumin, and one of the things that make it very bullish for Acuity going forwards. And again, when we're talking about this parallel between Illumin and Shopify, they're digitalizing this space for the mass market. They're revolutionizing it to the point where anyone can go on Illumin and make their advertising campaign. And that is exactly what companies like Shopify, Expedia have done. And that is one of the things that differentiates Illumin from companies like, potentially Facebook or TheTradeDesk or Google or Amazon or whatnot. Now I want to talk about competition and the potential threats it poses to Acuity's business model. When we talk about companies like Facebook, Google, Amazon, they focus on social, search, and commerce advertising. This is not what Acuity does. This is not Acuity's market. Acuity runs graphic and video ads shown on web pages and connected television. Companies like Facebook, Google, Amazon, they don't offer you this potential. They don't offer you this opportunity. They work in a different market. Again, Facebook, social media platform, Google searches, Amazon for commerce. And when we talk about Acuity, they're really focusing in on the web page and the connected television aspect of this business. So when we talk about potential competitors, you really got to look at something like TheTradeDesk. This is a company that's, in a very similar spot to Acuity, and they're a $35 billion company at this moment in time, while Acuity is under $1 billion by a significant amount. When we talk about TheTradeDesk, though, they're very similar to Acuity's original business model, where they're really focusing on working one-on-one with larger institutions to run advertisements for them. When we talk about Acuity, their differentiating factor is now Illumin, to the point where they can go mass market with this and allow regular day folk to run their advertisements. And even if TheTradeDesk eventually does create an Illumin-esque style product, Illumin will always be there. And Illumin will always be there to continue taking market share throughout the world. And in my opinion, this is one of the ways that will allow them to slip right into TheTradeDesk, as they don't have a mass market consumer product yet. They're still working with institutions. So that is, I think, the differentiating factor with Illumin, and it's one of the reasons why I'm so optimistic about their revenue growth going forwards. Next here, I want to talk about the opportunity from a total addressable market standpoint. Currently, the global advertising industry is $614 billion in size. When we talk about the global programmatic industry, again, this is where Illumin and Acuity really works in, it's currently $118 billion. Now, as the advertising market continues to expand to $1 trillion industry in 2027, we expect the global programmatic industry to increase alongside that, if not even more, to the point that a majority of advertisements is done programmatically. And that will be one of the key driving forces of Acuity's growth going forwards. Not only is the market that they're expanding in large, but the market itself is expanding as well. And when we talk about the connected TV aspect, again, this is one of the ways that Acuity advertises. This is only growing as well, currently around a $4.5 billion market, expected to double over the next 2 years with a 50% compounded annualized growth rate. So they're in great industries, they're in booming industries, and we can expect their market share to grow going forwards alongside that. Now I want to talk about the NASDAQ uplisting. In the last conference call, the management team mentioned that they have officially hit all of the milestones needed to uplist to the NASDAQ. Obviously, right now they're on the over-the-counter exchange and the Toronto Stock Exchange. So now that they're profitable, strong revenue growth, strong business model, they're eligible to list on the NASDAQ. And once this does end up happening, this opens up a lot of institutional buying power and a lot of just better sentiment around the stock. I think OTC stocks generally get a bad vibe or a bad rep due to the fact that the OTC market is often associated with, small penny stocks and things along those lines. But if you dig a bit deeper, Illumin and Acuity have a phenomenal product, and I don't think looking at it as an OTC stock does its justice. And once it does eventually uplist to the NASDAQ in the near future, that will open up a lot of institutional buying power and a lot of institutions looking at Acuity like, you know what? Why are we valuing the trade desk 3, 4, 5 times higher than we're valuing Acuity? Next thing I want to talk about is the financials. And this is very important whenever you invest in a company. When we talk about the revenue growth that Acuity has experienced over the past decade plus, it's been explosive to the point where a 68% compounded annualized growth rate occurred throughout 2011 to 2019. Now, what we've seen in 2020 is a decline in revenue due to the pandemic and whatnot, but we can expect Acuity to be a rebound play. And in my opinion, the growth that they've experienced will continue and gain momentum throughout the next 5 years here as the digital ad market continues to boom. In 2020, their revenues totaled right around $105 million, with right around $16 million going down to adjusted EBITDA. But the really interesting thing, guys, is that despite the revenue decline we've seen throughout the past year, their profits increased quarter over quarter. And this is phenomenal, guys. When we talk about this, the company has declined in revenues, right? That's expected. We had a pandemic. But what we also saw was the profitability actually increase as the revenue decreased. And this is one of the things that makes me really optimistic going into 2021 and beyond. Seeing this increase in profitability, seeing them become a profitable company over the past year here makes me very excited to see not just revenue grow over the coming years, but profitability alongside that. And when we look at their most recent earnings call here in Q4 of 2020, we saw revenue still decline right around 9% year over year, but we saw massive growth when it comes to net income, when it comes to adjusted EBITDA, and the percentage of their revenue going down to net income. Back in 2019, we saw $2 million in net income from $38.5 million in revenue. That's right around 5-6% net income margins. Here in 2020, we saw revenue of $35 million, but net income of $4.2 million, meaning that despite revenue declining, we saw over a double up in net income to right over around 12-13%. When we look at their balance sheet, we see total current assets of $56 million compared to current liabilities of $30 million. So they could pay all of that off and still have a lot of money sitting around. Now, one interesting thing here is the comparison between 2019 and 2020, where we saw their cash increase and their liabilities decrease. And one thing going forwards is as they become a more and more profitable company, the profits will go right to the balance sheet, right to that cash position. So as that money starts to flow in a massive way, that'll open up a lot of potential for them to potentially make acquisitions or spend more money on research and development. And one last thing I want to cover here is, when we look at the platform here of Illumin and Acuity, what we are seeing is customers come back in a massive way, which with much larger contracts. When we look at, these are just 4 examples here in their investor presentation, around $840,000 spent in 2019 or in 2018 from a D2C mattress company up to a $10 million campaign in 2020. A nonprofit organization as well, a massive increase here. So what they're doing is essentially companies are coming in to Illumin, Acuity. They're testing the product out. They're seeing how good it is, and they're coming back with much larger contracts. So when we look at growth going forwards, I think it's going to be attributed to 2 main things. 1, the acquisition of new customers, and 2, current customers expanding their contracts. Now I want to touch on my long-term price targets, exactly where I think Acuity will be 5 years down the road from a revenue, profit, and valuation perspective. First thing we got to understand is the current valuation. Their current share price is right around $14 Canadian. Multiply that by the fully diluted share count of 57.8 million, and we get a current market cap of right around $800 million. This is obviously Canadian. All of their essentially financials are reported in Canadian dollars. Now, looking at revenue growth, analysts are expecting $130 million in revenue in 2021 and $162 million in revenue in 2022. That's right around 25% revenue growth. I think Illumin will offer Acuity a chance to maintain that growth rate, if not exceed that growth rate in 2023 and beyond. So when we look at this 25% growth rate, I really feel that this is more of a conservative number, given the potential that the Illumin platform has to really go mass market. So, using this 25% growth rate, we get right around $317 million in total revenue by the end of 2025. When we talk about gross margins, currently gross margins are right around 52%. Now, as the Illumin platform continues to get integrated within the current Acuity platform, we can expect gross margins to increase because of the decrease of needed workers and needed customer service within the platform. So honestly, with 55%, I might honestly be conservative here, and we can expect potentially 60% plus going forwards. But, I'm expecting 35% operating expenses and taxes to get a net income margin of 20%. Again, right now, the net income margin is currently right around 12 to 13%. I expect that to climb as gross margins increase and operating expenses decline. So that gives us total net income of right around $63 million by 2025. We multiply that by a price to earnings ratio of 50. We get a $3.2 billion market cap, or an upside of 300% to $55 per share. And when we talk about the valuation here of a price to earnings ratio of 50, we look at a lot of these tech companies, and we can compare this to even like a TradeDesk. The TradeDesk is trading at a price to earnings ratio of 150. They're trading at a forward price to earnings ratio, looking at 2022 numbers, of 100. So looking at a platform like Acuity, which is much smaller, potentially has parallel growth, I could very well see a situation where Acuity trades at potentially a 60, 70, 80 price to earnings ratio. And you need to keep in mind, this is the current price to earnings ratio of 2025 numbers. So by the time we get to 2025, the forward price to earnings ratio, which a lot of people are going to be looking at, might be closer to 40, right? So even looking at these numbers, I think a 50 is conservative. I think, a revenue growth rate of 25%, again, that's a little bit on the conservative side. And with that net income margin, I could definitely see that expand if gross margins increase more than expected. So, let's bump up these numbers and take a look at what if the Illumin platform takes off. And let's say revenue growth is 30% instead of 25%. In that case, revenue increases substantially over the next 5 years, and the upside increases alongside that. Let's say gross margins increase as well. The integration of the Illumin platform will allow for a massive increase in gross margins. We could potentially get 60%. That would be massive, right? That gives us a net income margin of 25% now. Obviously, price upside continues to expand. And let's say in that case, the price to earnings ratio increases as well, because Wall Street realizes, hey, there's no reason this thing should be valued so low. Let's get maybe a 60. This is where we really start to see that real potential upside. And keep in mind, these numbers are obviously on the high end. But if we look at even just the conservative numbers here that I had previously, we still get, potentially a 4x in stock price over the next 5 years, a compounded annualized growth rate of 31.4%. Now, if we look at the US stock, obviously kind of translating this to US dollars, it gives us a right around $44.67 price target. Looking out to 2025, the stock on the US exchange currently trades at $11.38. Now I want to go through what I'm doing, if I'm buying, selling, or holding. Acuity currently makes up right around 7% of my stock market portfolio. I bought pretty heavily over the past week here, given the decline that we've seen. And one of the main attributes that can be paired with this strong decline in stock price is their recent Q4 2020 earnings report, where we saw a revenue decline year over year. Now, I think a lot of investors were expecting a rebound and to actually see positive momentum. I think this next earnings report is where we really see Acuity take off from a revenue perspective and start to get positive numbers. Their next earnings date is May 11th, which is next Tuesday. That will be big, guys. And I think expectations are low. I think expectations are very low given the kind of strong decline we've seen in the stock price, going from $26 per share all the way down to $11. So obviously right now Acuity makes up 7% of my portfolio. I'm willing to bump that up to 10% if the stock kind of trades in this range over the next couple of weeks. But again, it's a company I'm very bullish on. It's a company I'm very excited on. And if you have any comments, questions, concerns, let me know down in the comment section below. See you guys next time.